All right, guys, what is going on? What is Gucci? What is Gucci? You guys having a good time? You guys having a good time or what? Of course you are. Of course you are, chat. I told you. Right? Nothing beats Jet 2 holiday, chat. Right? Nothing beats a Jet 2 holiday, and no indicator will outperform my brush tool. You know what I'm saying? My brush tool is the fucking GOAT. Look at that. Remember that? Gosh, we got to get this done early, chat. We got to get this done early, okay? At the end of our session yesterday, remember like 12:40, 12:45, 12:50 when we ended the stream, right? What did I tell you? What did I tell you? I said, hey, we should probably come back and do a discount. And I gave you the 420 level. Sure enough, back into a discount, 420 level. Isn't that insane, Mark? Isn't that insane? Man, John, you say nothing's better than your brush tool. Yeah, and then look what we did yesterday. We drew a fucking line. A line. Literally. A squiggly random line. And price obeys that like a trained dog. Do you doubt the things that I teach you? Why? People doubt this stuff, man. How can you doubt me telling you it's going to go lower before going higher? And it goes lower and then rallies 200 points to where I told you it would. Or it was likely to do that. That's fucking crazy, dude. It's crazy. And yet people are still buying $1,000 courses and hopping on live streams with like little to no value. It's crazy to me. It's crazy. It is absolutely crazy to me. Anyway, I won't spend a lot of time on this because I did talk about this yesterday in the market review, but just know, right? What is law number one, chat? What's law number one? The 48 laws of trading. What is it? While we do our intro real quick. What's good? Oh, Libright was first today. Welcome. What's good, Lee Bright, Sean, Jorks, Robert, Ebernith, Monkey, Lauren. It's either Lauren T or Laurent. I don't know. I'm gonna just say Lauren, I guess. Arno, Mason, MJ, Marshall, Slowly, Patch, Capitalist, Jordan La Savage. Make sure to swap over to the Marsh contract. I saw that in the chat earlier. Eric, and anybody else that I might have missed, welcome. And welcome all the non-members too. I know there's people out there who are not a member, but they're watching a live stream. Shout out to you guys as well. I'm glad you're here. T.O. Oh, shit. Excuse me. T.O. Gold for all-time highs. Yeah, you're wilding. You're wilding with that. Silver, probably. Gold, I don't know. I don't know about that. What's good, Fernando? So law number 1. Buy low, sell high. Everybody knows it. Everybody knows that. The problem is how we classify it. How do we classify what's low and what's high? And one of you asked the other day about like fib retracements and stuff, and I told you that I do mine backwards. I measure mine, either the fib or the Gann box, it doesn't matter. It's just quadrants anyway. There's no 618 or anything. It's from a target. It's from an upside target to a low that's been set that you think is going to be the low, right? The halfway point of that range is technically equilibrium. So from the low that's been set up to 50%, that is considered, in a general sense, a discount. It's a discount market. The high end of it's a discount. The low end of it's a discount. Everything in there is a discount. Even the 50% mark. Right? I taught you guys that already. You want some more hindsight? Watch this shit. Remember I told you 50% is a discount if you're bullish? What's that right there? What's that right there? We went back into a discount, left it again, and then bang. The 50%, the equilibrium right there becomes a discount to long. Oh, you didn't see that shit, did you? Just like I said yesterday, you will not find what you do not look for. If you don't look for it, it won't be found. Hello. 25% is considered discount of a discount. Okay? Discount of a discount. See how that works? 50% up to the target is considered a premium. It is considered a premium. And the upper quadrant, meaning the upper 75%, or 25% if you drew it differently. Again, it's quadrants here, the upper quarter, we could say. The upper half of the upper half is like an extreme premium. Right? That's literally law 1. So when we are, when we made the low, right? And we cross 50%, when we get into a premium for the first time, even we actually get to the extreme premium up here as well. Once we do that, okay, that's fine. Crossing 50% is a key. That is a key indication. Okay, that's a very, very key indication. So that's why immediately, okay, it's the, what is it, the highest level of understanding, unconscious competence or whatever. It's like you just know it. Right. What's the very next thing we should do? Well, if we made our low and we've rallied past 50%, we don't want to be longing that. We want to be longing either at 50% or lower, ideally lower, obviously. So we had a multitude of imbalances in here. We had like 3. The highest one, right? The Snoop Dogg imbalance, right? Or the Wiz Khalifa imbalance. That one's up here. That's the highest one. We may not want that. It's in a premium. It's above 50%. Probably not ideal. The lower one here, okay? I'll just make it blue to differentiate. The lower one, that's tradable. Now, if your stop was at the low end of it, you got cooked. If your stop was inside this lower one here, you got cooked. But what are some of the rules for stop loss placement when it comes to the imbalance? If we take the higher one, we need a stop at the lower one. And the stop doesn't always go inside the imbalance itself. It's supposed to go, and again, there's variations here, but in the traditional sense, when you have a imbalance, right, with the 3 candles, it takes 3 candles to form an imbalance, no more, no less, right? When you have that 3 candle or the 3 bar formation, it goes to the low end of that. Okay, so the stop is down here based off of something like this. Okay, now you might think, oh, well, John, I don't know if I can frame a 1 to 3 off of that. You may not have gotten a 1 to 3. Like if you were trading that, like the 80 level to the 280, and you had a stop like way down here, yeah, you probably wouldn't have nailed the 1 to 3. It'd be a little under a 1 to 2. So you either, let's say, bump the stop to that down candle, or maybe like halfway of the discount and the discount or something to try and, you know, squeeze that out a little bit. But ultimately, we went back into a discount. We actually went to the, again, lowest quadrant, rallied 50% right there, sends price, down candle. I think that may have tagged into that or not, I'm not sure, but this is also the mitigation model. That's technically, this would be a reaccumulation model, because we have these up candles here. Okay, see that? That was distribution to go lower. We left that, and then right there, see that? So that became the law of the return. The law of the return. God will not be mocked. A man reaps what he sows. A person reaps what they sow. Price is no different. Price will reap what it has sown. Okay, it's sown bearish. It's going to be reaped bullish. It's going to return. That's why it's called the law of the return. You see how that works? So this could have been an add-on. 50% could have been an add-on. And then I ain't going to tell you because I said it in the market review, but that final hour in here, go mark up your macros. The macros that don't exist. Go mark them up and you'll see. What is the stop loss rule for the law of the return? That is a great question, Fernando. That is a great, see, make questions great again. Don't cancel me. So if we're going to do a reaccumulation like this, if you want to be, I don't think aggressive is the right word, but if you want to trade something like that, I would think probably the 50% level or the low end of the reaccumulation. Now, this happens to be the same, which may not always be the case. Like, let's say that up candle, the lower one here, like, let's say it stopped a little bit higher. Like say it was like that. It could go to the low end of that. So by having something like that, you can easily frame a 1 to 2 off of that. Or again, like I said, that could be an add-on parlay for the gamblers out there who don't know what an add-on is. You're parlaying. You're adding to a winning position. Do we have any gamblers in the room? I don't know. But yeah, you could either do that, or it could go to the previous stage of, it could go, if you're like in a bullish environment, it would go to the low end of the previous stage. So if this was the manipulation, pretty much all of this was the low risk buy. First leg, and then this started the second leg. When you're inside the second leg, in something like this, that can be a little bit difficult because it would be down here. I'm not going to tell you to long that with a stop down here. Now you're going to have a negative RR or an RR that's less than 1, and that's trash. So we're not going to do that. He said we're all gamblers. Yeah, blocked. That's crazy. That is crazy. But yeah, hopefully that helps. Low end of reaccumulation. Low end of like maybe an inversion. It just depends. It all depends. It's like this imbalance was in that retracement to go lower. That got traded through, and then right there, right at 145, new 15-minute candle as well. That becomes an inversion to go higher. You didn't see that either, did you? Nope. No, you didn't. You gotta look for it, man. You gotta look for it. All the supply and demand buyers came in here. The buying pressure sent price higher is what it is. So there's that. Anyway, as far as today, all right. This type of environment, right? The fact that we have spent so long, meaning from 9:50 until right now, 11:50, so almost 2.5 hours, we have consolidated. That's not great for longs. Okay, that's not great. I used to talk a lot about time constraints, where I told you, hey, we've already done a certain amount of movement. Like, we've already done a lot of movement. We may not have enough time in the day to do more. I don't really talk about that a lot anymore, but today's definitely one of those instances where I do not expect for us to come all the way back up to the 6880s or the 6890s. I'm not going to expect that here. Right? I was tweeting earlier, right when we were near 50% of this daily imbalance, I think it is. And I wanted to see how we would react down here. We haven't done a lot. So what would it take to go long? Oof. I don't think longing down here is a good idea, personally. So I think this would be left open, obviously for another time, but I don't think it's going to be today. And I don't have a lot of interest in that. Excuse me, I would have been interested if we would have left this already. We have some like internal highs here. That was like a level of distribution. Like, if we look at it the same way, right? Consolidation, distribution, and then some sort of like redistribution to then go higher, I could see that. But the fact that we're like not going higher, it's not really offering like a manipulation and then reversing, you know, like expansion lower met with expansion higher. It's not doing anything like that. So I would not, here at least, be interested in longs. So it's probably a great day to read a book. Every day's a great day to read a book, but even more so. So speaking of books, I'm going to drop the link in the chat. I think that's the right link. That's the Amazon link to How to Read a Book by Mortimer J. Adler and Charles Van Doren. So I know I've mentioned that a few times already on social media, as well as this live stream right here on YouTube. But this is going to be book of the month for January. Okay. So you don't have to use the link, but it's at least there for you. And 2026 is going to be a year of reading, bro. A year of reading. Exploring other topics, finding connections between topics, Some of it might help you in trading. Some of it probably help you in different areas. But I'm excited for 2026. I've also got some other stuff in the works too. I can't tell you about this yet, but I asked a question on my Instagram story yesterday, and I had asked if you own a single member LLC. So we had a few votes in there. We should do that again here. I know there's like 50 people. Maybe some of you do. Let me just do a poll real quick. Obviously not. Well, your LLC could be trading related, but even if it's not. Do you own a single member LLC? Yes or no? It's just to get a consensus. I'm working on a pretty effing awesome project right now. And if you are a single member LLC, then I got some cool stuff for you. Again, not today, not even this year. There's only like 2 or 3 weeks left anyway, but I'll tell you guys more about that as time progresses. But yeah. Is it probable that we could get to that daily gap? What I think we were on NQ when you asked that, right? I don't even know what you're talking about. Are you talking about down here? Like this one from November 21st to the 24th? I don't know, dude. We would need a lot further downside for that, if that's what you're asking. Personally, when I went to bed last night, well, like this morning rather, I stayed up pretty late. I actually had in mind that we were likely to trade higher today. So when I got up, when I actually got out of bed, I looked at the markets, they were red. I was like, oh, I guess not. Yeah, Mark, it'll be soon. It'll be soon. But I'm telling you, it's not like I've seen part of it already, and I'm excited. It's gonna change the game for a lot of people. Actually, we can talk about it a little bit, not directly, but indirectly. Let me ask you guys a question. Watch this. Okay. Drop. We didn't do ones already, did we? No, we didn't. Okay. Watch this. Drop a 1 in the chat if and only if you have read the entire terms and conditions of a contract you signed. If you signed up for a social media account, if you signed up for a YouTube account, an Amazon account, any type of account on an app, and you actually read the terms and conditions before you checked the box, before you signed your name, you read the entire thing. Drop a 1 in the chat if that's you. You read the terms and conditions. You know what I'm saying? Like you read all the words and we're like, okay, this is cool. Let's go. How many? That doesn't count, capitalist. That was a project for school, or that was an assignment from school. That doesn't count. Let me rephrase. On your own, okay, without being told to do so, outside of obligation, drop a 1 if you've read the terms and conditions. Okay. Yeah, real quiet, Roberto. Right. Nobody does. I don't do that shit either. I was at the when I bought my Corvette earlier this year, back in January, dude, I signed my name probably 25 times. There was so much, bro. It took like 2 hours to sign all this paperwork. It would have taken weeks to read all that shit. Okay. We're not reading it, bro. We're not reading terms and conditions. Nobody does it. The only person that does it is if you're in school, right? Or if you're the lawyer that wrote the shit up. That's it. Nobody else does. Okay. Drop a 1. Again, for all my LLC owners out there. We got 22 votes. 30% of you have one. So that's like, what's 1/3 of 22? 7? I might be a genius, chat. I'm just kidding. All right. Drop a 1 in the chat if you like paperwork. You like filing taxes. You like putting that shit together. You like doing paperwork, opening up bank accounts and sitting around and doing appointments and all this bullshit. Listen, I would rather stub my toe on the desk like 4 times in a row and take a scooter to the ankle before doing paperwork. Nobody likes paperwork. Nobody reads terms and conditions. Okay? I'm on to something, am I? You think I'm on to something, chat? This one might be, you might actually drop some 1s in here, but drop a 1 if you're an LLC owner, some sort of business owner, okay? Drop a 1 if you actively keep track of your expenses. You know every expense, you know every subscription, you know every, let me ask you this, drop a 1 if you know all of the write-offs you can do. Do you know all of the available write-offs for your business? That's why I said really bright. Some of you might have this already. Because there's a lot of, I want to say, organizational tools out there. So some of you probably do have that. So that's fine. My point is, we're at 25K even, by the way. My point is, a lot of business owners have trouble staying organized. They do. We do. Okay? Because nobody likes this type of shit. Especially creators. Like Lee Bright. Lee Bright's a perfect example. I'm glad you're here, Lee Bright. You made it today. You've been gone a little while, but I'm glad you're back. All right. Lee Bright is a creator, just like me. We create stuff. We live stream, we trade, we build lesson plans, right? Like we do a lot of stuff that has some sort of like artistic curve to it, right? We like exploring different options for things, right? You know, we're interested in stuff. We don't like paperwork. We don't like the back end of shit. So what I'm working on is a key to fix that side. So the less time you can be on the back end, paperwork and all that fuckery, the more time you can have to create and to focus on your business, like marketing or creating content or whatever it is. So I'm working on a fix for a lot of stuff. And that's the extent I'm willing to go. As far as like what I'm working on. So you get the idea, but it's not entirely too specific. So, yeah. Don't know all the passwords for all the accounts, apps, and websites? Yeah. You know, see, you bring up a good point because the problem is in today's world, drop a 2. Nah, I ain't gonna do it. We ain't gonna do it. Don't go into the chat. But let me ask you this. Just think about it. How many of you have the same password across multiple accounts. Your Google and your YouTube is the same as your Amazon, is the same as your bank account, is the same as Twitter and all that shit. Again, don't tell me. We don't want to put any security risks out there. But I can tell you a lot of people do that. They use the same password or the same 2 passwords for a bunch of shit. And you know what happens is you sign up for a shady website. Obviously, you make an account and you put in your password, right? And that data gets leaked. Now the dark web has that password, and they can put that password into like your other shit. Bang, your shit's gone. It would be, this is not legal advice, okay? But it would probably be a good idea if you had a different password for every account. Instead of, because you lose one and you're bound to lose them all. So just be careful. Just be careful. That is a good point. Jorgs, I'm not answering any questions. I'm not answering any questions today about that. See, Libre, how did I know that? Your dad's like, oh yeah, I use the same password for everything. Right, and it's like password 1234 or some bullshit. I need a password I can remember. Password 1234. What the fuck, man? I had a friend like that. They lived in a gated community, and I was like, hey bro, what's the password? He's like, oh, 1234. Why even have a gate at all? Why? That's the first password people are going to try to get in. I'm telling you, man. Society's cooked, bro. We get cooked more and more every day. More and more every day. Okay, Dow finally gave a significant run below yesterday's low. So Dow's actually our strongest index today. It was rather reluctant because it like tapped the low at 1050, random. Did it again at 1145 and 1150, like right here. And then it actually gave us a real extension below yesterday's low. So I'm not trying to say this is going to be our low of the day. I don't think it is. I think today is a shit day for trying to long. I wouldn't recommend it. But I would keep 68.82 on your chart though. Bro, y'all think it's funny, but it's real stuff. It's real stuff here. As technology grows, bro. See, we think that bad people don't exist. Okay? But they fucking do. Every technological advancement that there is, which it's the core idea is to help society, right? Like, take Facebook, for example. I think it's bullshit, but imagine that Mark Zuckerberg is delusional enough to believe his own bullshit. But if his philosophy is we want to connect the world together, connect everybody together, you know, to share ideas and share cultures and whatnot, that may be true. That might be true. But you know the problem, though? I mean, it sounds good, right? Well, I'm a trader. I want to meet other traders. Seems good to me. Okay. What happens when a group of terrorists find another group of terrorists and they become friends? Now you got a bigger group of terrorists. You see what I'm saying? Every technological advancement always has some sort of what's it called? Negatives to it. There's going to be pros, but there's going to be cons as well, right? So I think the issue is as technology keeps advancing and advancing, now we're in this age of AI. And I said this already on my Instagram multiple times. If you are not getting with the times, if you are not learning more, you're going to get left behind. And that's literally dangerous. Literally, it's dangerous because if you're not getting smarter to be able to protect yourself, protect your family, right? The bad actors, the people who want to do damage, they are getting smarter because they're looking for more ways to do bad shit. They're looking for more efficient ways to do bad shit. Do the math. It becomes more dangerous for being stupid. But don't listen to me. People always ignore me. I said stock up food in 2023. A lot of people said, oh, John, you're stupid. What happened earlier this year? SNAP benefits. Goodbye. A lot of people didn't have food. Didn't listen to me. Whatever, man. Ignore me at your own risk. It's your life. You do what you want. You talk about time a lot. I understand macros, but I don't understand when you say the opening of a new time frame, like the 15-minute or the 30-minute. Can you explain that, please? Yeah. So, like, say, for example, if I'm looking at something, like right here, okay? Like right here, 12 o'clock. That's the open of a new hour. I wouldn't want to long something like that because NQ, for example, we have some lows down here. So if we open at 12 and immediately go higher, I'm not going to long that. We may come back for that lack of wick, or we may come down for these lows. Shorting above the open of the hour is kind of like the idea there. It's a PO3 concept, power of three. Open high to go lower, or open lower to go higher. So this might be a 5-minute time frame, and this might be another 5-minute candle, but this is like an hourly candle. You see what I'm saying? 12 o'clock open, it went higher to then go lower, right to those lows. See that? We just did that. See that? See how we're extending below that rather quickly? Right. Because liquidity is building here as traders are trying to catch the low or trying to buy a retracement. That's why I said this isn't a good market to long. Again, you don't have to listen to me, dog. But if you're long right now, you're underwater, aren't you? And that's all it is. Whenever we're near 5, 10, 15, 20, 25, that's all a new 5-minute candle on a 1-minute time frame. Go back to the time compression matrix. I do not know where I stashed that image. Somebody probably has it. It might be in the Discord somewhere. I have, oh, here it is. Here it is. The time compression matrix is just a fancy name for looking at time in a different way, I guess you could say. So this obviously this is an image that I created, but it works the same way. There are, I believe, 60 candlesticks here, right? They're just lines, but they represent a 1-minute chart. So you're going to have 60 1-minute candles in a 1-hour candle. A 1-hour candle can be divided into 2 30-minute candles. 30 plus 30 is 60. Quick math. A 1-hour can also be divided into 4 15-minute candles. One 15-minute can be divided into 3 5-minutes. So my point is, when we're on like a 1-minute or a 5-minute, right? If we're near the opening of a 15-minute candle, that's what I'm referring to. Because a lot of times, like I just said, you might be bullish, and then let's say this 15-minute candle starts. So it could be, let's say, 12 12:43. You don't want to probably long at 12:43. Oh, it's 12:42 right now. I didn't even try to do that. Okay, it's 12:42. That means there's about 2.5 to 3 minutes before the next 15-minute candle opens. So it's usually better, it's not, maybe not always, but it's usually better to wait for that next 15-minute candle to open, 12:45. And again, if we're bullish, we can wait for it to trade lower. It is a timing tool, if that makes sense. So when you really look at price, okay, and they all went lower. So whenever you look at price, okay, today's not a good example for like this study. Well, at least as of right now, maybe earlier today. Okay. When you are bearish, I wasn't bearish. I slept in today. You know, we're not going to talk about it, but if you are bearish, every time we see a higher time frame open, it's likely an opportunity to short. Not every single candle, but again, you have to study this, right? We traded lower at 7:15, then we traded higher back into this consolidation. There we go. Back into this consolidation and traded off of it 7:45. So 8 o'clock, that's a new hourly open. And this, obviously in hindsight, this is forming a market maker buy model, but we're on the sell side of the curve. So if we're going to trade lower, if we're not already short, if we didn't short any retracement, we can wait for 8 o'clock, wait for it to trade above, you see what I'm saying? Above the open of the hour, and we can short that to go lower. Or maybe you're not in on that. The next 15-minute candle, 8:15, so 8:16, 8:17, 8:18, some shit like that. That is a short. You see what I'm saying? 8:30, that's equities open. You want to be careful around equities open. It gets volatile. But same idea here. 8:30 opens, it trades higher to go lower. So that's my point. These wicks here, they go higher to go lower. And that's going to be the same for every time frame. Right? If you go back to NQ, like yesterday, remember we were bullish. I gave you 420. You can't escape it. Stop trying. Okay? Stop trying. 420. You can't do it. All right? Can't do it. 15-minute, lower to go higher. 130. 15-minute candle open lower to go higher. 145, open lower to go higher. 2 o'clock, final hour, open of the hour lower to go higher. It does come back a little bit. No worries. 12:15. I wonder what that is. Open lower to go higher. 2:30. What did I tell you yesterday? Look in the fucking Discord. I said, hey, last 30 minutes. This is the final 30 minutes. Words matter. Read what I'm telling you. We're in the final 30 minutes. And I told you what? 420 is still on the cards. Now I left. I went to the bank. But I'm still going, yeah, I'm in the car traveling to the bank, okay? And I'm like on my phone looking at it. And I'm like, yeah, it's probably going up there. Bang. Every minus the 1 o'clock candle, okay? Because if you bought the open, yeah, you definitely took some drawdown. But my point is 1 o'clock open of the hour, lower to go higher. And when we're bullish, every higher time frame candle is an opportunity. It's that simple. And this, again, this is on any time frame, especially a daily, right? All of these candles, lower to go higher, higher to go lower, higher to go lower, higher to go lower, lower to go higher. Today, higher to go lower. But it's every time frame. It's just a timing tool. You get me? The easiest way, the easiest thing you can do, we have an indicator for this. I I may have gotten rid of it. Someone has an hourly open time frame, or an hourly open indicator. I don't think I have it anymore, but if you want to be old school like me and you want to do it manually, just mark up the open of every hour. There's 7 a.m. You can mark 7 to 8. Do like a bright color that really stands out on your chart. Do 8 o'clock to 9 o'clock. Do 8:30 to 9. That's equities open. That's the first 30 minutes. Okay, you can do that too. You can do 9 to 10 every hour. There's 9. Here's 10. Okay? And it's the same, like you said, Lee Bright, it goes all the way up. Daily open, which you could do midnight New York, and the session opens. That's what my indicator's for. The one I had made like 5 years ago. Not that I'm ahead of the times, but anyway. It goes up to the weekly open, the monthly open, and even the yearly open. That's in 48 Laws of Trading as well. Let's talk about that. But yeah, anyway, the point is, because obviously we can't go back and trade it, but you can see the phenomenon. Higher to go lower. 9 o'clock, or 8 o'clock, excuse me, higher to go lower. Equities higher to go lower. 9 o'clock, it didn't do a lot. It didn't really have like a smooth higher to go lower. It does consolidate, but you get the picture. It's just, if we're bullish, we want to buy below the open. If we're bearish, we want to short above the open, ideally. It doesn't mean you have to, but it's a nice rule of thumb. They're reference points in time and price. So when you stack all this shit together, like, let's go back to yesterday. Again, today just doesn't have a lot of good examples of the things that I like to look for. But remember what we did earlier. Target down to the low. And you have 50% and lower, 50% and higher. Okay? Notice okay? Do a combination here. Y'all go through the drive-thru, don't you? You get a fucking combo. Look at this combo. 115. Okay? Open low to go higher in a discount. You may not have caught that retracement. You may have gotten scared. Well, that's a fat retracement, John. Oh, I might be a PUSSY. I may not trade that. Okay. Next candle at 11:30 or 1:30, sorry. Guess what? That open and lower is still in a discount. It's right there. See what I'm saying? Open lower, that prints at the time a down candle. Because on my chart, it would be a dark gray candle because it is trading below its open. But that's the phenomenon. We want to buy low, sell high. We want to buy on the way down before it's going up. The most important information on any period of time is the open. I mean, yeah, I suppose so. I mean, he trades with more size than I do. He's made more money than I have, so it's fine. But it's a reference point. We're below 50%, and these are below the opens of higher time frame candles, right? And you can investigate. I'm giving you a bunch of stuff to study here, and you probably won't do it, but at least I'm giving it to you, right? You see something like this, 115, trades down higher, and then trades back to that same open, right? These down candles here, right there, that's a little bit above the open, but it's tailoring a concept that is near the open, ideally below it, but it doesn't always do that for you. You get me? So when I'm looking at a chart and I'm looking down, okay, most people look I don't know where most people look, but they don't look down. They don't look both ways before crossing the street. You got to look right to see price. You got to look down to see time. If you don't look at the time, you're going to mistime a lot of trades and then be irritated why your trades don't always work. Some of them do, some of them don't. You're going to be like, well, what the fuck? Right. 2 o'clock is here. There's your open of the hour. It trades down to go higher. If you're not already in, okay, where's 215? Right here. See that 215? And it trades down, or right here, 218, something like that. You're in a premium, okay? But you're still trading in the direction of opposing liquidity. And you're in the right time frame too, or the time window. You got to think about the macros in here. 218, that's part of a macro. The only macro outside of the 20-minute time windows is the one in the final hour. You see what I'm saying? So that's when I have a naked chart and I'm looking at something, when I highlight with my mouse, my cursor, you can see here at the bottom, whatever I'm highlighting, can you see that? Yeah, you can. You see how at the bottom it shows like Tuesday the 16th of December of this year at 1:30 p.m., right? You can see that. That's how I'm referencing time and going, okay, should I long this? It's at 127. Well, we could. Or we could wait for 130 to trade lower. See what I'm saying? That's that phenomenon. So I know we spent a lot of time on that question, but I don't really have anything else for you. And that's it. So hopefully that answers your question. But the best trades are going to present themselves after everybody else gets stopped out and at the right time, price, and context. Time is a big key. And trading around the open or closes of a higher time frame candle can present those opportunities. I used to call them like micro fluctuations, because it's a micro fluctuation against your bias. It goes higher a little bit to go lower a lot. It goes higher a little bit to go lower a lot. And it's those retracements that are amazing, amazing opportunities. So with that being said, I feel like that's a good note to end it on. So, Lee Bright, if you're free, give me a call. If not, it's cool. But I'll tell you the secret. I'll tell you what I'm working on, but I ain't gonna spill the beans to the public just yet. So give me a call in like 5 or 10 minutes if you can. Y'all be good, man. Be blessed. It is Wednesday, so no stream tomorrow. On Thursday, more time to read, by the way. But I will put out a market review, as I do every Tuesday and Thursday. And we'll be here same time, same place on Friday the 19th. So don't do anything stupid. Merry Christmas. I'll see you guys on Friday.